Hello and welcome to the weekly market metrics. We are in week 44 of the year, just 8 weeks left in 2025. Just the right time to plan for your year-end holidays. Anyways, let me get back to business. Time for our weekly dose of market metrics. This was a tepid weeks in the markets. Nothing much exciting. Markets are kind of taking a breather, I think. But this is also a month end and I have a lot to share. Outside the markets though, there were two exciting events. One, Trump meeting Xi in South Korea, and the tariff rationalization that were announced can be called a temporary de-escalation, but Indian markets don't seem to be too happy with it. And yes, I cannot miss mentioning India's historic victory over Australia in the ICC Women's World Cup semi-finals. That was something indeed. Let's get started with the charts and indexes. Nifty first. With October over, let's look at the monthly chart. Starting with Nifty, in absolute terms, it added 1,111 points this month, a quadruple Nelson as they call it. Let's hope the superstition doesn't play out this time. By the way, if you look at the chart, I see a cup and handle forming on the monthly charts. Do you see that? Maybe a saucer of chai getting ready for a breakout sip. But jokes aside, it really does look like a classic cup base. If the handle forms cleanly, this could turn out to be a Kadak chai pattern for the Nifty this year. Moving on to Nifty weekly, after breaking out of the 15-week consolidation, Nifty is still hovering near that breakout zone around 25,700. It's been 2 straight weeks where the index failed to close above the psychological 26,000 mark. Last week's bearish doji turned out to be a solid warning. Nifty tried to move about 26,100, the previous week's high, but it got rejected right at the same level again. For the week, the index slipped about 73 points, closing at 25,722, down roughly 0.28%. On the charts, the immediate resistance remains at 26,100. That's the high from the past 2 weeks, followed by the all-time high near 26,300. On the downside, support is steady at 25,700. For now, Nifty continues to move sideways between 25,700 and 26,100. If I have to talk about my view, this looks more like a healthy pullback with the uptrend intact. If 25,700 holds, we could see another push higher in the coming week. Let's see how the market plays out in the coming week. On the daily chart, Nifty opened strong on Monday, held gains through Wednesday, but Thursday and Friday erased the entire week's progress. A doji on Tuesday's monthly expiry hinted at indecision, and that played out as a selling pressure near 26,100 in the latter half of the week. Resistance and support zones remain unchanged from the weekly chart, 26,100 and 26,277 on the upside, 25,670 followed by 25,450 as support. From the week's high at 2698, Nifty slipped about 375 points, roughly 1.44% decline, almost the same correction we saw last week. Moving to the 1-hour time frame, Nifty finally broke below the 50 EMA on Friday, the last trading day of October. Since 14th October, Nifty had been trading above the 50 EMA, gaining about 270 points or roughly 3% and holding that level for nearly 17 calendar days, around 13 trading sessions that is. With the sell-off on Thursday and Friday, the price has now slipped about 110 points below the EMA. Historically, short trades don't sustain well in Nifty, and with the index near a critical support zone between 25,700 and 25,670, this will be a level to watch out for. Let's see if the bears finally hold or get butchered like they usually do. With this week ending the month of October, let's look at the monthly seasonality on Nifty. After a weak mid-year stretch, we've now had 2 consecutive green months, with October gaining 4.51%, the second best month of the year after March's 6.3%. In the calendar year 2025, Nifty has now logged 4 red months out of 10 this year, with a total gains of 8.79%. Historically speaking, November and December have been strong months for Nifty, with win rates of 60% and 68% and average gains of 2.76% and 2.61% respectively, the highest among all months. If the US trade deal goes through, it could act as the next big trigger, potentially pushing Nifty beyond its all-time high. The data supports an upward bias. Now it's just about getting some catalyst to spark the rally. Talking about intraday versus overnight moves in Nifty, this week both were negative. Even though Nifty opened with positive gaps on Monday and Wednesday, the negative gaps on the other 3 days wiped out those gains. On an intraday basis, Nifty slipped about 0.22% for the week. Looking at 2025 year to date, Nifty has gained roughly 9.14% overnight, but only 0.92% intraday, showing that most of the year's upside has actually come outside of regular trading hours. Let's move to Bank Nifty's monthly chart now. On the monthly time frame, Bank Nifty stood out with a strong 5.75% gain, adding nearly 3,140 points in October and has given its highest ever monthly close. Moving to Bank Nifty on the weekly time frame, the last 2 weeks might look weak, but when you zoom out, the trend still looks firmly bullish. Essentially, it's taking a breather near the highs, not reversing. If 57,600 and 57,400 hold as support, Bank Nifty could be setting up for another higher move once the momentum kicks in. This week's candle was a spinning top coming right after last week's shooting stars. But don't get lost in the candlestick names. It simply means Bank Nifty is facing resistance near 58,500 and 58,600 zone. This week, the index made a high of 58,470 and reversed to close at 57,776, just 77 points higher or about 0.13% for the week. After 2 weeks of almost no gains, the view remains bullish to sideways with hopes that 57,600 levels hold as support. Resistance stays at 58,500 and 58,600. Looking at the Bank Nifty on the daily time frame, the resistance and the support zones remain largely the same as on the weekly chart, with resistance around 58,600 and support between 57,600 and 57,400. On the daily chart, Bank Nifty printed 3 back-to-back green candles at the start of the week, followed by 2 red candles on Thursday and Friday, which erased most of the earlier gains. Now, looking at Bank Nifty on the hourly chart, just like Nifty, Bank Nifty also broke below the 50 MA and is now trading about 162 points or roughly 0.3% under it. It had stayed above the 50 MA throughout October, maintaining steady momentum and finally closed below it on the last trading day of the month. During this entire stretch, Bank Nifty added nearly 3,100 points, marking its strongest monthly run since April, before cooling off towards the end of the month. Moving to Midcap Nifty on the monthly chart, it logged its highest ever monthly close just like Bank Nifty. The October high of 13,555 is the next key level to watch. Once that's crossed, Midcap enters the blue sky territory with no historical resistance overhead. For the month, it added 869 points, a solid 6.89% gain, making it one of the strongest performers on the index front. Similar story for Midcap on the weekly and daily charts. Resistance sits around 13,550 and support near 13,400. For the week, Midcap gained around 303 points or about 2.3%, and on the daily chart, it showed 2 interesting candles in the first 2 sessions, a hanging man on Thursday and a spinning top on Friday. Simply put, the index is stuck in a narrow range between 13,380 and 13,540. What's impressive though is that Midcap closed all 5 sessions in green compared to previous close, showing it was more bullish than both Nifty and Bank Nifty this week. Moving on to the SENSEX monthly chart, it shows almost an identical pattern to Nifty, falling just 361 points short of a record high monthly close. SENSEX gained 3,671 points or 4.57% in October, making it one of the strongest monthly performances this year, second only to March. The broad trend remains firmly bullish with momentum clearly intact heading into November. Moving to the SENSEX on a weekly time frame, the index lost 273 points or about 0.3% compared to last week's close. The overall structure mirrors that of Nifty and Bank Nifty, showing consolidation after a solid run. With almost no gains over the past 2 weeks, Sensex has breached the key support at 84,100, closing below it at 83,938. Resistance remains around 85,300, followed by the all-time high zone around 86,000, while the next support sits at 83,100. So for now, the index looks range-bound with a mild downward bias unless buyers step in around 84,000 zone. On the daily time frame, Sensex is showing a pattern very similar to Nifty, with price action mostly consolidating through the week and selling pressure in the last two sessions. Resistance remains near 85,300, which aligns with last week's high, while support is holding at around 83,100, consistent with the weekly levels. Moving to rate of change, for October, the performance was green across all major indexes. Midcap led the pack with a solid 6.89% gain, followed by Bank Nifty at 5.75% and Sensex with 4.7%. Looking at the year-to-date numbers, Bank Nifty continues to lead with an impressive 13.6%, followed by Nifty at 8.8%. Interestingly, even after a strong October, midcap still trails behind, up only around 4.34% for the year. Now, talking about mid-cap Nifty, all those gains have actually come in the past 6 months, where the index is up a solid 11.53%. It's been a late but strong comeback for the mid-caps after a sluggish start to the year. Let's see if November brings the momentum back across the board. Moving to directional bias, even after 2 weeks of no meaningful gains, the bias around the major indices remains positive in the short to medium term. All indices are still trading above the 21 and 50-day EMAs on the daily time frame, indicating that the broader trend stays intact despite near-term consolidation. Looking at the top performing sectors this week, PSU banks and metals continue their strong run from last week, gaining 4.69% and 2.56% respectively. Joining them this time were Commodities, Energy and Infra, all posting around 2% gains each for the week, showing a broad-based recovery beyond financials. Talking about range, expiries and India VIX this week, Nifty had its widest range day on Friday at 243 points, followed by Tuesday at 232 points, which is also the monthly expiry. The 5-day average range is around 200 points, roughly the same as 10-day average, showing Nifty has been swinging about 200 points daily for the past 2 weeks. Bank Nifty, Midcap Nifty and Sensex show similar 5-day and 10-day range structure, reflecting a phase of contained volatility. Interestingly, last Friday's 2DT, Nifty straddle premium was around 158 points, and this week it has risen to 218 points, meaning the market is pricing in some sort of volatility ahead. Let's just hope this volatility shows up on the upside. Talking about the Nifty expiry day last week, it was typical of a monthly expiry full of volatility. The index rallied 112 points in the first 30 minutes, then slipped 231 points till about 2:15 p.m., then finally recovered 115 points in the last hour, ending the day by forming a perfect doji on the daily candle. It was a kind of a session that left short wall sellers exhausted, classic expiry behavior. But that's how expiries go. Some play out like Nifty, full of whipsaws, and some like Sensex, which gave a clean directional 600-point drop, except for some last-hour shenanigans. Moving on to India VIX, it inched up 4.65% this week to close at 12.15. Now that's still low, but after months of calm, it's a sign that volatility might be mean reverting. Is the market worried a little? Maybe. Could be the earnings season or even the chatter around US-India tariff deal. Both can make traders hedge a bit more. But at these levels, it's less about fear and more about the market saying, all right, things have been too quiet for too long, it's time for some action. Moving on to commodities this week, after a strong October, gold cooled off slightly, slipping 0.87% for the week, while silver managed a modest 1.64% gains. Both, however, remain firmly positive for the month and year, with gold up 4.16% month to date and 51% year to date, and silver up 5.23% month to date and 61% year to date, easily outperforming equities in 2025. Copper, though, added 0.98% this week, extending its steady uptrend, while crude oil stayed almost flat, down just 0.04%, and natural gas stole the spotlight by surging 11.33% this week. So overall, metals continue to shine, energy is mixed, and natural gas leads the pack. So in short, this week the market teased us again, and after an impressive October rally, it looked like Nifty might march towards a new all-time high, but it ran out of steam right at the finish line. Despite a strong start, the index couldn't hold on to its midweek gains and slipped back into its familiar 26,100, 25,700 zone. Bank Nifty and Midcap Nifty, though, still look relatively stronger, both closing October at record monthly highs. The broader structure across indexes continues to suggest consolidation rather than a reversal, a pause, not a pullback. Sectors like PSU banks, metals, and energy extended their leadership, while IT and FMCG cooled off. Volatility as measured by India VIX ticked higher to 12.15, hinting the calm of the recent months might be ending. Gold and silver took a breather after a stellar run, while natural gas and copper continued to shine. So far, it's been a textbook healthy pause within a broader uptrend. The key question now is, will the market bounce from this base or break lower from here? Now, moving to what we can expect next week. Now, the next week looks relatively quiet on the events front. No major data or policy announcements are lined up. That means markets may take their cues from global developments and stock-specific earnings instead. Still, keep an eye on the US-India tariff deal chatter. Any progress there could act as the next spark. On a lighter note, it's also the ICC Women's World Cup 2025 final, India versus South Africa on Sunday, November 2nd. So expect some excitement off the trading screens too. Let's see if the markets get inspired by our Women's World Cup team and carry that winning energy into the next month. Until then, stay curious, stay steady, and have a nice weekend.